Greetings traders and welcome back to another in-depth with Chris episode. In today's discussion, we will be covering what revenge trading is, as well as how and why you should probably avoid it if you want to be in the career path of being a trader, at least for any length of time. But before we go any further, please do me a favor, click that like and subscribe button down below if you haven't already so I can keep coming out with content for all of you out there. But without further ado, now let's work our way into revenge trading. Revenge trading has been around for as long as trading has been around. If there was an opportunity for a trader to get angry at the market, there was an opportunity for a revengeful trader. It's something that is rather difficult at times to dodge entirely because a lot of the times revenge trading exists in a world where we don't even know that we're doing it. So to start off, let's cover exactly what revenge trading is. It is by definition when you take one or more trades in an attempt to recover an initial relatively significant loss from a previous trade. So that means if we lose a trade and now we're taking more trades specifically due to the fact that we lost the trade, we are now revenge trading. And as you probably know, irrational trading almost always ends badly. The higher the loss, the harder we might want to hit back to quickly get away from that uncomfortable feeling of such a high loss. Revenge trading is when we're driven by emotion to pound the market instead of driven by logic and trading based on a sound trading plan itself. We're trading on something more. That's where the emotion comes in, and that normally does not end well. So if we understand simply that revenge trading is bad, well, why do we do it? Many traders may not admit it, but the fact is most of them have fallen victim to the trap of revenge trading at some point in their trading journey, if not on a regular basis. So do we do it because we like harming ourselves? No, not so much. It's because we're human. We're driven by instincts and we are driven by emotions as much as we don't want to be. And those of us that are not driven by emotions are probably of the robotic family, and that's really not who I'm communicating with right now, at least I don't think so. And as far as emotions go, we are a product of whatever experiences come forward. So whether we win or whether we lose, we are now going to be feeling some type of emotional trigger. We're going to be feeling some type of push to feel a certain way, to act a certain way, and as such, it's in our very human nature to revenge trade at the core of it. That does not mean that we can't overpower it. And an example of revenge trading would be, let's say we were trading, say, the pound dollar, whether it be Forex or futures, doesn't matter to me, and let's say we went in long at a price of, I don't know, 1.42. Let's say that unfortunately we were long at 142, but price fell to 1.32, triggering our stop loss, and we've unfortunately netted ourselves a loss here. Well, as a response to this, because we were profitable all before this, say we had 3 or 4 trades go on in the morning before we got to this 142 entry long, and all of a sudden, we don't want to ruin a perfect morning. We don't like to have to think about the thought that we're going to have to tell our trading associates that unfortunately we went 3-1 or something like that. So what we decide to do is we decide to go long again at 1.32 because surely the market has to rise. And instead of going long at like we did at 1.42 with a sound trading strategy, we're now going long just on an emotional basis, which means if the market does not go for an emotional reason, which is not necessarily the only thing causing the market to rise, if it does not go up to where we need it to, which in this case would be at least the 1.42, we have now committed a revenge trade and possibly dug our hole even deeper because the quality of this trade is just not so good. That's an example of revenge trading at its finest. The dangers of revenge trading are not death and destruction, at least not directly, but they are the death and destruction of your trading account, or can be. The concept is pretty simple. If we make bad trades that are bad for our overall trading equity, there's generally going to be a negative impact on the health of our trading account. So, the real danger of revenge trading is losing the ability to trade in the worst case scenario because you have just blown through all available trading assets and you just don't have the skin to put in the game anymore. So, yes, revenge trading is pretty darn dangerous. Luckily, there are multiple things that we can do to avoid falling victim to revenge trading. Even though walking away isn't always the easiest thing to do, these are some aspects of walking away that we can focus on to make it a little bit easier that will lead to that walking away process. Part of things that make us walk away is remembering our roots. If we're trading and we say this is not the strategy that we planned on, now we're taking trades that are just kind of bent off the rules in order to satisfy an emotional trigger I'm feeling right now, well, this is something that can allow us to walk away. Another thing that can allow us to avoid that revenge trade by walking away is by taking a look at our mistakes and learning from them. Mistakes are not fun to make. However, what's worse than making a mistake is making the same mistake twice. If you focus on how you really don't like the feeling when you make the same mistake twice, more so than just generalizing all mistakes as the same type of negative feeling towards your brain, then you'll probably start learning from your mistakes, which means revenge trading, one of those mistakes, won't happen as often. Then you have number 3, which is know your trading triggers. This helps. This helps a lot, and this is a very personal matter. If you know that when birds are chirping outside your window, it makes you freak out and you punch your screen, then you probably shouldn't trade if you hear birds chirping out your window. And if you've been able to recognize this, you're on the way to avoiding trading when those birds are chirping. I think that's a quite silly example, but I think you get the idea here. One of the fastest and easiest ways to improve your trading results is by focusing on things such as staying disciplined. The reason behind this is it helps avoid scenarios that are obvious leaks like revenge trading. There's things that we can do to make sure that we do stay disciplined. We can stick to our trading routine, and this is pretty simple. This means whatever trading plan we've written for ourselves, whatever rules of engagement we are going to follow. We are not going to do anything if it is outside of our predetermined plan. Number 2 is don't deviate from a proven trading method. This doesn't have to be someone else's proven trading method. It can be your own. But the concept is we don't want to deviate in a live market away from something that we know is solid. Even in the sim world where we're testing new ideas and new strategies, we still want to have a basis in something that we know works. Number 3 is learn to identify market noise. If we're able to identify when the market is just experiencing jitters and not treat that as a takeoff point for an opportunity to go long or short, we can avoid those scenarios where our trades just simply don't take off or potentially don't go our way at all. Number 4 is if we accept that losses are inevitable, this is something that will take a large psychological pressure off of our back. No matter what you do, you are going to have times where you lose, even when all of the analysis is completely correct. Nothing in the trading world is ever guaranteed because there's a variety of competing variables at play. Number 5 is know when to stop, and this is probably the most important thing on this list. If you know when to stop, if you know when you're emotionally compromised, that is just as valuable as knowing when to take a trade, because you can avoid digging a hole and erasing the gains from all of those trades that are going in your favor. So it's very important to have these internal monologues and see if you are feeling like you're compromised and you need to stop. At the end of the day, trading is something that is already very challenging all on its own. And for that reason, we want to eliminate all of those easily identifiable leaks as best we can. It doesn't always mean it's going to be easy to remove them, but we do want to be able to focus on those that we can easily access and know for sure are leaks, such as revenge trading. We've talked about exactly how to identify it, as well as some of the things that we can do to stay disciplined and avoid succumbing to it. So hopefully this will help you out in the future. But until next time, best of luck out there. Happy trading, happy hunting. I'll see you soon.